Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at whether retail traders and investors are currently accumulating Bitcoin. To do this, we're using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it is released. So right now, we're just on the addresses with a balance of at least one BTC chart on lookintobitcoin.com. And as we can see, with Bitcoin's price dipping fairly substantially in light of the recent FTX insolvency scandal, we can see as we zoom in, the addresses with at least one BTC has increased exponentially. Now this, throughout all of Bitcoin's price history, has been on a prolonged and fairly steady uptrend, but recently the rate of wallets holding at least one Bitcoin has increased very dramatically, and even with this bearish price action, it's leading many to believe that a lot of traders and investors are taking advantage of the potentially discounted BTC and are trying to accumulate as much as possible at these prices. And that seems a fairly logical way to analyze the market at the minute, because historically, whenever we see the addresses increase substantially, this can usually lead to accumulation and give us some insight into how retail traders are currently feeling about current price action. We can also see when the addresses decreases, this is usually a bearish sign, but usually the addresses decreases along with negative price action. So seeing this inverse correlation between the addresses increasing and the price decreasing does make a lot of people think that a lot of people are seizing this opportunity. So if we go to look at the realized price, where this is the cost basis or the fair value network utilization price of all the BTC, this is looking at the last price at which each Bitcoin was transacted at on the network, aggregating all of that data and averaging out to find the true realized transactional value of all BTC. So if we look at this realized price as the last price at which any BTC was transacted at, potentially bought at, we can see right now we're currently beneath the realized price. Realized price is currently sitting at around $20,000 as the Bitcoin price is at about $16,500. So we can see a majority of Bitcoin were actually purchased at prices higher than we currently are at now. What we can also notice is as the realized price is decreasing fairly substantially, we can see people are accumulating at these levels, because if the realized price is increasing, that means that purchase of Bitcoin are being made above the average cost basis. Whereas right now, in times like this, where the realized price is decreasing, we can actually come to the conclusion that people are accumulating at a lower price than the current average realized price to bring that realized price down. But we have to look at this from another perspective. Even though the data may suggest that people are accumulating BTC at these prices, that doesn't necessarily mean that they are. It may just be that the behavior of a lot of Bitcoin investors and traders is actually changing due to the outcome of the FTX situation, with a lot of users unfortunately seemingly losing a lot of their investments. Many people are taking the initiative to actually hold Bitcoin in their own wallets. A lot of people are implementing the not your keys, not your coins philosophy and are actually taking self-custody by moving Bitcoin off exchanges into their own private wallets. So this is probably also having a large impact on what we can perceive as accumulation, as it may not necessarily be lots of people accumulating Bitcoin at these prices. It may just be them moving off exchanges into their own personal private wallets. So just to summarize, following the collapse of FTX, a large number of traders and investors have transitioned to holding their BTC in their own wallets. This increase in self-custody of coins prevents users from experiencing a loss of holding in the event of subsequent exchange insolvencies. Like we saw with the FTX outcome and what we can see with rumors of other exchanges potentially being insolvent, many users aren't taking the chance of holding all of their Bitcoin on an exchange and would prefer to hold it somewhere where they know is safe and know that can't be insolvent. What we can also come to the conclusion of is that this change in user behavior will hopefully result in more exchange transparency going forward, with public proof of reserves becoming increasingly common. This proof of reserves will show that all Bitcoin on any exchange is actually backed one-to-one and is not being used for any shady business dealings. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And let me know, are you accumulating at these prices? As we discussed, there's two sides of the coin here. People are moving coins off exchanges, but many will actually be taking advantage of the discounted BTC we're currently seeing and are accumulating. So let me know what your thoughts are on the market and where you see us going forward. Thank you very much for watching, and I'll see you in the next one.